Take a look at shares of Roku right now, up more than 19%. The company reporting an earnings beat boosted by its focus on ad-supported content. Anthony Wood is the CEO of Roku and joins us now. Anthony, great to speak with you.
Nice to be here, thanks.
So we focus a lot on Apple and the fact that it's leveraging its hardware to basically double down and grow its services business. Taking a look at the results you put out last night, it looks like you have a very similar strategy in place at Roku in terms of your products.
Yeah, I mean, our basic strategy is to be the streaming platform for television. We're America's #1 streaming platform. And we do that by building active accounts. So this quarter, active accounts were up nicely, 46% to 22 million. And then monetization of those active accounts, primarily through advertising. And that's really going well as advertisers follow viewers to streaming.
I want to get a little more info from you on the Roku channel, because you just launched that on the web, also some Samsung TVs. Given the fact that it is an ever-increasing competitive landscape, and we just got the news about new TV this week, more details on the direct consumer offerings from Disney, how are you differentiating that, and how are consumers reacting to that?
Well, the Roku channel is doing great. I mean, on Roku today, it's already a top 5 reach channel. And, you know, the basic thesis of the Roku channel is that consumers move to streaming for a couple reasons. One is it's a better experience than traditional TV. You know, you can watch anything you want on demand. But also it costs less money. And so as consumers move to streaming, they're looking for a few subscription services, but they're looking to supplement that with free content. You know, they like value. And the free long-form content area is underserved in streaming. Almost all, you know, media companies are focused on subscription services where the consumer pays. So we decided, look, there's a big opportunity for a free service that's ad-supported, and so that's what the Roku channel is. It's focused on long-form content, entertainment content that's free, ad-supported, and of course we make, you know, the vast majority of our gross profit from streaming advertising as advertisers move to streaming. So it's another way for us as a business to generate ad inventory. And we started on the Roku channel, but we are moving it to other platforms. You can try it out now. We just launched on the web on therokuchannel.com.
Yeah, this off-platform viewing product, you say it won't generate significant revenue in 2018, but how big could it be long term?
Well, streaming, I mean, the whole world is moving to streaming. You know, our business is being the streaming platform, including the Roku channel is one aspect of that. And we think it's a huge business. We think that 22 million active accounts is just the beginning. There's billions of broadband connected customers. They're all going to have an operating system in their TV. We have the leading operating system for TVs. And it's a big opportunity, and we're very well positioned.
When you look at the past week alone, CBS, in their comments about All Access, their projections on subs, obviously Disney Flix, ESPN Plus, Hulu. Does it feel to you like it's getting crowded, or is that corner anywhere nearby?
It feels to me like the big media companies are really starting to embrace streaming in ways they never have before. I mean, there's a lot of activity in mergers, you know, as these companies position themselves to compete with the original incumbent streaming companies like Netflix and, you know, Amazon, but the traditional media companies are now moving, you know, full force into streaming, and that's bringing more content to streaming. That's excellent for our business because it brings more streamers to our platform. It brings more content for us to help sell and build audience for, and you know, that's how we make money. It creates more advertising inventory for us to sell ads into. You know, it's just great. It just means that the world is moving to streaming. I mean, for example, like a really interesting stat is that, you know, today, if you're an advertiser and you want to reach a key demographic, 18 to 39-year-olds, that only 10% of those viewers can only be reached by advertising on Roku. So advertisers are starting to follow their viewers to streaming.
Anthony, also want to get your thoughts on these wireless TV speakers that you just launched a couple weeks ago. How's the early reception been?
I'm super excited about this. You know, some people say, why are you making wireless speakers? It's because we're a TV platform, and we have a great TV platform, but we want to make it better. And one of the things people like to do is to add audio to their TV to make the audio better. And they do that today through, you know, surround sound systems or sound bars. But those systems are often expensive and hard to connect. We want to make it so that you can get a low-cost, great quality speaker, just plug it in, and it wirelessly connects to your TV, and now you've got better sound on your TV, and it's super easy, and it's very inexpensive. And for us, that's what our wireless speakers are about. It's about making Roku TV owners like their Roku TV more, making it a better experience.
Hey, Anthony, it's David Faber. All the data that you conceivably are taking in on your viewers' habits, what do you view as most important in terms of informing the decision making at the company in terms of what is next?
Well, you're right. We have a lot of data. Of course, we take privacy very seriously, and we make sure that data doesn't leak out. But we use it in a lot of ways. We use it in our ad business, of course. I mean, in the streaming world, our ad platform, every ad served on our platform is a one-to-one targeted ad based on the data we have, which is completely different than in the traditional linear world where ads run in a show. So we use it in advertising, we use it in content recommendations, and we use data a lot to make sure the quality of the product is good. We're always looking at which features the customers use. Are the features working well? Is the system working well? So the sort of round trip feedback you get with the product usage is really, by using that well, you can make great products, and we focus on that as well.
What are you seeing on time spent? Is it continuing to increase?
Yeah, streaming hours were up 57% in the quarter. Active accounts were up 46%. So streaming hours are growing faster than active accounts. Hours, ARPU, which is average revenue per user, was up very nicely as well. And that's because streaming hours per user are up. It's also because monetization capabilities per user is up as well. But yes, what we're seeing is that as more content comes to streaming, viewers are spending more and more of their daily TV viewing time streaming versus watching traditional TV.
And Anthony, I know we're spending a lot of time.
Our expectation is that over time, every hour watched on television will be streamed.
Obviously, we're focusing a lot on streaming, and that is, and the advertising is becoming a majority of your business. But the devices, the TVs, the speakers, still a big base of your revenue. What is your holiday season prediction?
Well, the majority of our, we flipped a quarter or two ago to the point where the majority of our revenue now comes from our platform business, which is our non-hardware business. We obviously still sell players. We sell a lot of players. Players were up nicely this quarter. But, our goal in selling players is to build our active account base. So, we're not trying necessarily to build hardware revenue. We're trying to build our active accounts, and we used all the tools available to us to do that, including lowering prices, running promotions. So that's why we're in the hardware business. The streaming business is doing well. I expect that to keep continuing even through the holidays.
Are you seeing any kind of impact from the advent in Fortnite or time spent playing video games?
We don't see that. I mean, I'm sure that these days consumers have lots of options on how they're going to spend their time, including, gaming. But really, what's driving our business is this really dramatic shift from traditional linear TV to streaming, and that shift just, floods any other sort of impact that's happening in the market.